Hello guys, welcome to the Trading Parrot. Before I go to sleep, I'm gonna do a very quick summary of what happened today. Where are we with the liquidity, the 4-hour daily time frame? We continue for the lookup for reversal signs to the upside. If you want the executive summary, we still don't have it. But in this video, I will tell you what needs to happen for me to start gaining confidence that we could be building a reversal to the upside. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And I forgot to mention, but thanks so much guys for the performance of the video on Sunday is just mind-blowing. Think about this. Just a few months ago, we were doing hundreds of views in every single TA video, and seeing a video with almost 15,000 views doing just TA and getting over 1,000 likes is just mind-blowing. So thanks so much for that. I will continue with what I'm doing. I hope that is the reason the channel is doing better. So let's get started with the summary. On Friday, we closed on CME at a very high price. We said that that is great because if we have to break down in here due to the huge selling wall at 100k, even the psychological effect of that, then we could produce a CME gap above the price at the opening on Monday. And that's precisely what happened in here. We went slightly lower and then we came back up to close that gap. But the question at that point was, which is 9 AM in UK time, are we gonna hold there? And I published this video of just 5 minutes update where I explain what needed to happen for price to continue going higher and what needed to happen to see a rejection and further continuation to the downside. And in a nutshell, we were pointing at that point to the red resistance, and we say we needed to look out for a breakout above the red. That will be a local breakout. And the next target is the global trend line, the one that comes from the very top of the RSI 4-hour and touches 2 times in here. That was roughly located at 65, 66. And if we break a global breakout in here, then we can start talking about 87. We talk about all those targets in the chart. At that point, we were even above this area and people were asking, are we gonna continue higher? And the RSIs could not close above the red line. And since that happened, that gave us the confidence that we were still below resistance, putting a big wick to the upside, turning it into a liquidity hunt. After that, market maker just dumped to the next level of support, which we also say was 94.8k. That comes from this support on the RSI trend line, which was at that point located at 40. We touched this multiple times. We went even below the RSI 40, but we have been so far closing above it, with the exception of the previous candle that broke just by 1 point below the 39, closing at 38 in here. So things are looking weak for the 4-hour. I don't discard that from here we could go and hit once against the resistance, but every time that you put a very tiny fractional move below the trend line, you kind of discount a little bit more of bullish momentum. The good thing is that we have done a full move from the top of the range into almost the bottom of the range. Yes, we are at support of that trend line, but what is the downside in here? We have 34 according to statistics from percentile nearest rank. So if this was a breakdown, we could go into 34 as well. Point is, nothing happens until we break above the red line. Okay, in terms of bullish momentum, we can look up for some bottoming process that could happen in this range. It could happen somewhere in here, wherever it happens. If you are a degen long and you are itchy for entering again, you can do it before the breakout above the red line. That will give you the best reward, but also the highest risk. If you wait for a breakout above the red line, you're taking a smaller risk, and above the white line, you get the most confidence, but you're not gonna have necessarily the longest ride up. So in a nutshell, not breaking above the red line is a huge risk to start thinking long. And the reason is also because the daily time frame is still saying we have further downside. The 4-hour could break above the red and produce a dead cat bounce too. Let's not discard that option. And that is because we have moved from one extreme to the full other extreme, and we have left a fair value gap in here. How could it play out a scenario of a dead cat bounce? Well, we could come back above the previous range. That will be a positive sign, hold there, and then target the fair value gap at 97.7. Still respecting this resistance, that will give a good ride to the upside, which is not crazy if you think that we are now once again so far up until this hour inside a megaphone pattern. Of course, if we start extending this, I'm getting used of extending the lines of megaphone patterns, given that the past 8 months we were doing nothing but extending it and extending it and extending it. I hope we're not gonna go through that ever again, and this is just a 4-hour time frame. But it's not crazy to think that a rally into here is possible, but at least so far we are seeing a candle that has 3 hours left but is seeing a rejection of 94.8k, which previously was support. So caution with that. And what I mean is wait for the 4 hour to close before draw conclusions. I don't mean everything is possible. Wait for the 4 hour to say, yes, I held support. Yes, I broke support. And that small detail can say a lot about the direction. It's not that I mean you can go in any direction, you can go sideways in every video. I'm telling you what to observe for clues on the direction. Anyways, let's move on to the daily. And so far, the Hive is very happy because the target of 7.3k total of the 2 times ATR, so far we have done 3.271, which is almost half of the target of what the Hive was saying. And given that this was such a huge move up, meaning we are in a very strong uptrend, finding that candle small there as an entry for a short is so far giving pretty good, decent returns if you are in a short. Now, let's look into the RSI daily. We had the breakdown in here that was confirmed by the end of Saturday. Since that, we have come down today into 68, putting a new lower low and a lower high, confirming the fact that we should be looking for this channel. I say that from around here. We need a channel to the downside. And it's been already 2 weeks, and here we are, a channel to the downside. Now, what do we have in this chart that is still not validated yet, confirmed? The low. We don't know tonight where are we gonna close. Whether we put the line like this or like that, that will depend on the closing price. So far, I'm gonna leave it there, and tomorrow we'll see in the morning if it's still there. Otherwise, we adjust it. Why is that important? Because from here, we're gonna start calculating all the swings highs, swing lows to make this a lot more tradable. For example, if tonight where we are in the price and we were to hit 79 in the morning, that could be a very juicy scalp on the daily. 79 already is at 106.6. So you can see that just this partial move towards the downside on the daily RSI has pushed quite high the targets. Before this red candle, that RSI just takes us into 98.5. With this candle in red, that moves further away to 106.7. That's just crazy. And the resistance at 86, which will be the 4th time that we touch that resistance in the full bull market, tonight is located at 123. Just a heads up that the MACD is getting very close to produce the bearish cross. If tonight, for example, we go into this support at around 91k, which is actually the target from the Hive, I'm pretty sure that we confirm the bearish cross, which is now happening a lot higher than 73. Not because of the price, it's because the momentum in this pump has been so far more intense than the pump that we saw prior to this. There's been further deposits from big wells, and that's why we are back again ratio of 1. That is not necessarily bullish, and it's not what I'm expecting to see based on past performance. In this month, in November, right after that peak, we started coming very quickly down into the end of November. But here is becoming a little bit more sticky and not wanting to go below ratio of 1, which will be the bullish thing to do. And thanks to all these bearish moves, the weekly stochastic RSI so far is still crossing, confirming the bearishness of what's on the charts. But this is not settled. A move up above 100k can quickly undo all of that damage. The shorter term liquidity pools are exhausted to the downside, and to hit new red areas we have to go all the way to 88k or to 85, and it seems that going up is the easier thing to do in terms of liquidity pools. The only thing that is constantly in my head is how much BlackRock must be happy now that we haven't crossed above 100k, since most of the call options were from people betting to go above 100k. So that's definitely a win for them, and there's still 4 more days for those options to expire. fire in BlackRock. So maybe 4 days that they keep the price restricted in here with all the psychological crap that we've been seeing in the order book of 300 and 200 today million in selling wall, spooking the markets, causing them to increase the level of ask in all this range to record levels. And that's precisely what it caused. It made all the people to sell go to 94, 95k. We don't know if we are going to completely fulfill the target of 91 from the hive, but so far we can see that the ask liquidity is reduced at least to half or 1/3, we could say. And that means that those limit orders to sell are either getting executed as market orders already and that push the price down, or they're being closed without any effect. The bullish thing, in my opinion, is that once we get over those options, the effect at the end of the month, whether we are still here or we are slightly lower, we have done a great job creating these 3 levels that I'm sure are going to be pretty juicy targets for continuation to the upside, as long as we don't sell off to this level in here. I think this level we are talking about 61 to 65k is reserved probably for the bear market or for that middle time that we take in the summer, typically after a massive leg up. Think about 4 years ago, we have all this bull run into March. Think about this March as March 2025. Then we have some sideways, then we have a crash into summer, and then in the middle there's some time off, and then we get a dead cat bounce, not necessarily giving us a new all-time high like we had in here with a double top. That was an exceptional case. It could still be just a dead cat bounce entering into the bear market. So that 65k, in my opinion, could play the role eventually of this area in here. And the reason is because it's becoming really heavy, just as heavy as it was becoming that 28k in 2021. So let's keep an eye for that, because once we get that crash in there way later, maybe we can trade it with a very big long for a comeback right before we enter into a bear market, just like a boss. Delta, instead of printing now a channel to the upside, seems to be printing a channel to the downside, and we are in the area of the opportunity or very close to it, or longs. That's because shorts are becoming quite cocky in here. You can see that for the first time we are in the red. It's been since quite a long time we don't see red. Every time we get a leg up, it's just the longs, and now they have been taken down, and together with this accumulation of shorts, we could see some opportunity for maybe on the daily seeing a leg up in here, or at the very least for the 4 hour to see a move similar to this or partial proportion of this. And by the way, guys, if you really want to see some altcoin technical analysis, make sure that you go to Paul Barron Network channel and you watch the video we made with Paul with altcoin season begins. Technical analysis is in here. It's been live for 39 minutes. Remember to give it a like and leave some comments. That really helps me out as well. Guys, if you want to trade with an exceptional exchange, look no further than Bybit. I use Bybit for my trading bots, which by the way, you can find a link in the description if you feel like copying them. Here is the performance of the past year. The link for Bybit in the description offers up to 30,000 in rewards and the lowest fees to trade. I'm also running a campaign on Bluffing Exchange that ends on 14th of December. Pretty much whatever you deposit on this exchange is gonna give you good decent bonuses for free based on the amount deposit and the trading volume. This is the choice if you want to be able to trade with leverage from anywhere in the world without needing KYC, no VPN. You can open as many accounts as you want and trade any altcoin, Bitcoin, Ethereum, full freedom. And guys, if you want a free TradingView subscription for free, premium, just find my tweet from today early morning and follow these instructions. And don't forget that the top link in the description, I have updated Black Friday deals, the best ones that you can find among all crypto. And I'll see you tomorrow. Bye bye.